Hey, I'm Ken. Welcome to Stock Market Unfiltered, where we take a candid / funny look at the stock market. Try to be somewhat entertaining and somewhat educational. Man, how time flies by. Last time I did a video, I was down at the Cardinal drinking one of these beer. Couldn't think of it. The Cardinal's not watching. It's one of the glasses, but they gave it to me. One of them did. So I didn't steal it. Disclosure. And why am I drinking this beer? Because today was a terrible day. I could got a lot more choice words, but since I'm on YouTube, I won't say it. If I had the turd emoji that you have on, you send your little emojis in your text. I would send a turd emoji saying turd show. I can say that. That's what kind of day we had today. I was looking back, I hadn't been on since I was at the Cardinal last time doing a Beer Wars video. I looked back and said, man, that was before Halloween. It was the last time I was on. We've already had Halloween. We've already had an election. We've had Thanksgiving. And next week, matter of fact, a week from today, it's Christmas. I need to do a better job of being on here. Sorry. I'm staying busy all the time. I'm always busy. But today was the exact opposite of this. It was not a payday. It was a losing day. I think today I had not one stock in my portfolio that was up. Every one of them were down. It was the worst day I've ever had. Oh no, my portfolio for one day. After coming across one of the best days I ever had, back on November the 6th, the day after the election, when the Dow was like plus, I don't know, 1,700 points or something like that. So we're going to just kind of recap what happened today. Oh man, and I'm talking just a little bit about crypto since everybody's talking about it. I do have some crypto. I don't really trade in it that much, but let's recap today. So don't be scared and fear and just panic sales, what I call it, because this is not going to be a fear of missing out. This is a fear of going lower and you just sell it. It's a Black Friday sale today, let me tell you. Since Christmas is right around the corner, we've already had Black Friday back in November, but now every day is a Black Friday. It's 12 days of Christmas sales. But the Dow was down 1,123 points today. That's a 2.58% for a total of 42,326. Just a few weeks ago, the Dow was at an all-time high of 45,073. And now we're at 42,326. That's almost 3,000 point drop in 10 days. And speaking of that drop, the Dow has been down for 10 days in a row. 10. That is the longest streak. I found this hard to believe when I was looking up the research. In 50 years. We're talking about 1974, when I was only 13 years old. That was the last time the Dow had been down this many days in a row without being up. I was 13 years old. So I guess you can figure out how old I am. That's okay. I don't mind. The S&P 500 was down 178 points. That's unheard of almost for the S&P 500 to be down that much. It was 2.95% loss, and it's down to 5,872, and it was right at 1 point away from 6,100 points just 10 days ago. All-time high. These are all-time highs I'm talking about. Dow 45,073, S&P 60,99, basically 6,100. They were all all-time highs just a few weeks ago. Now the NASDAQ lost 716 points today, and it was the big loser percent-wise at 3.56%, which leaves it at 19,392. Its previous high just a few days ago, 20,204. So it's lost almost 1,000 points. The Dow's lost almost 3,000 points, and the S&P 500 has lost 300 points, all in the last 10, 15 days. All, mind you, from 52-week highs just a few weeks ago. And now we want to know why. Even though the Fed they had their meeting yesterday and today. Guess what? They cut interest rates 25 basis points, or those who like to use percents, 0.25%. So that means credit card debt interest rate usually goes down, home mortgages drop, and all that would think would be a good thing. But no, 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 no. Why? See, remember I've told you two things happen. Either the rate, that they don't cut the rate and they get mad, or they don't cut enough and sometimes the Dow goes down and the rate cut, sometimes it makes it go up. Well, today, it kind of stayed level. What moved it today? I told you that after they announced the rate decision, the Fed chairman has 15 minutes later, comes out and reads a 5-minute statement. And then he does questions and answers. And during that statement, those who are stock market analysts and do the markets and all these things didn't like the hawkish. When I say hawkish, that means aggressive. They use the term hawkish and dovish. If you're familiar with these birds, a hawk is a predator. It's very, can be savage and very harsh and aggressive. And if you talk about a dove, that means peace. It's a quiet little bird. They don't make much noise. They're quiet, peaceful, docile creatures. But a hawk's always in attack mode. So if you feel like the Fed is at a hawkish content, that would be an aggressive move. And what they did was, in that statement, Jerome Powell, who's the chair of Fed, said that he didn't see interest rates going down, but maybe 2 or 3 times next year. Oh, as soon as he said we don't see interest rates going down, or cutting interest rates maybe 2 or 3 times next year, this stock just went whoosh, right now. You can look at it. It was about 215. You go pull up a day chart of the Dow and just go to about 215 and watch it drop like a rock off a 5-story building. That quick. Yeah, I saw another person that they get, everybody's gonna put their 2 cents in on why the stock market was down. And one of those people that I was watching said that what the market are nervous about, why it was down so much. One of them said there's nervous sentiment outside. Sentiment is a big thing. If you have a negative sentiment in the market, it doesn't matter how good things are, how good the economy is, it doesn't matter. If that negative sentiment exists, stocks usually go down. Also, they said they thought the valuations of stocks were high. We're talking about like the PE ratio. If you got a PE ratio of a stock that's 200, that's a very high valuation because PE means price to earnings. So they earn, what they're earning is 200 times what their stock price is. So like you may go to a utility and you may see a PE of 15, 17. That means it trades at 15 to 17 times earnings. And that's normally, I like it to be 25 or less. I've talked about this before, preferably 20 or less, but I'll take 25 or less. Some of them I have are actually, some of the PEs are 390, which is crazy, but it's still earning money. And it's not that expensive for the stock. And another thing we talked about, the VIX. That's the volatility index. One of those days I've never seen it go so high. It started today at about 16. It ended the day at 27.67. That's plus 11.75 points on the VIX index. That's like a 70% increase in one day. That tells you what that tells you is how volatile the stock market is. Anything over 19, I consider that to be volatile. Anything over 21 or 22, I consider that extremely volatile. Down at, I've seen as low as 7 or 8, that means things are kind of steady. Go, people sell, buy, nobody panicking. But when you have volatility index above 23, in this case, 27, that's extremely volatile. Good for day traders, but I'm not a day trader, so we will see what happens. The market also was focused on that, and I like this analogy. They said that they felt like the Fed had their back. The Fed has nobody's back. They're going to make their policy based on whatever they think they need to do, not what the stock market wants. But previously up to this, we've all had all these all-time highs in the stock market. The Dow, S&P 500. NASDAQ, they've all been at all-time highs. That's great. Cheers to a bad day, and Merry Christmas, by the way. But when they feel like the Fed doesn't have their back, that goes back to sentiment that I talked about earlier, about the three things that somebody said why the market was down: the sentiment, the valuation, and the Fed's don't have their back. And there's another one I forgot to mention. They think there's too much of a rosy picture out there by the analysts. Everything's rosy because, and I'm not a political person, but Trump is a businessman, and there's expectation of him. He's going to deregulate a lot of things that cause companies to spend money. If you're regulated on something and then you no longer have to perform that regulation, it saves the company money. That would be deregulation, which is a good thing for stocks. But in this case, none of that made any difference because of the negative sentiment, the valuation of stocks, the VIX index. The Fed don't have their back, and there's too much of a rosy picture out there for the market. Oh, that's bad news. It's just depends on who you want to listen to. And I really get a kick out of the market thinking the Fed doesn't have their back. The Fed never has your back. They do what they think they want to do. And then the banks, because usually when you have a rate cut, the banks do not as good as they normally do because the rates are going down. So they charge less interest. They don't make as much money. But the other flip side is that mortgage rates are lower, so people might go finance more. But on top of that, the dollar index reached a really big time high. And it's like, for example, $1.48 in America might be worth $1 in Canada. So, if you're in Canada, and your dollar isn't only worth $1, but compared to the America, that's the world currency. They use the American dollar. If you're in Canada and you move something to the United States, it's going to cost you $1.48 in Canadian money to get it here. So that's bad for business who have parts made, shipped. They have to buy it from Canada or Europe or wherever it's at, and they're now paying more over there than they would here because the dollar index has gone up so much because the dollar is so strong. Things are cheaper if you actually make them in America instead of, let's say if it's $1.50 in Europe, the exchange rate. Okay, I go to Europe, I give them $1 of American money, they give me $1.50. I'm doing pretty good. So if you can get stuff in America sold over there, you're doing good. But when you have to bring stuff from over there to over here, you lose money, as in the businesses lose money. So the banks were down. The major banks like JP Morgan, Citibank, Wells Fargo, Bank of America, they were down generally about 4% today. And then the regional banks, which is like one of the banks I own, you guys know I own TFC, which used to be BB&T, now it's Truist. TFC is a regional bank. They averaged 5% down. Let me see what, I don't think I have Truist up here for how far it was actually down percent-wise today. I could probably at some point maybe pull it up, and I'll see if I can, just since we were talking about regions, but I know it was down there, I just don't know how much. So far as percent-wise, this might give me the, okay, here we go. Truist didn't do too bad today. But like I said, the average was 5%. Truist was down 4.52% today. Closed at 43.09, minus $2.04. So that was minus 4.52. So it's doing a little better than the average. PNC, which is a big bank, was down 3.27, which did better than the 4% average of some of the main banks. So this depends on which bank you were looking at. So, and let's go to, I want to talk about, because people have been talking about it. Earpods are falling out, sorry about that. But they've been talking, it's been in the news a lot lately, and I'm sure you've seen it over the last few weeks about crypto. Like I said, I'm not a political person, but I don't care who wins, and I really don't care. The only thing I care about, whatever happens, how does it affect the market, okay? So with Trump being in office, he is pro-crypto, regardless of where you like him or not. That's just the way it is. So Ethereum, at one point, this is in the last week, was at almost $4,000. Today, it lost 6.12%. The current price is 36.82. So it's done a little better than Bitcoin. Just like I said, just a few days ago, Ethereum was at $4,000. So all this bad news going on today didn't necessarily just affect the stock market, like the S&P 500 and Dow and NASDAQ, but also affected cryptocurrencies. I don't see a single crypto coin that's up today. I'm sure one of them is. I got like 1, 2, 3, 4. That's 6, 7 on my screen right now, and they're all down. Bitcoin. It was just last week. Everybody was talking about it. It crossed $100,000, all-time high. And not only did it cross 100,000, but proceeded to go up at one point. I can't remember if it was today or yesterday. I want to say it was today. It was $106,000, either today or yesterday. It was plus, when I looked at it, it was plus $638 for one day. Now, the only reason I have crypto is because years ago, I got a refund in Bitcoin for $71. And of course, I have a Coinbase account, so I just left it in there. And that $71 is now worth $700. That is $700. That's a big gain for a $71 refund, and now it's worth $700. So sit there. I don't care. I just let it sit there. And Ethereum, I wound up getting that because a few years ago, me and my son got into mining. So when you get a bunch of graphics cards, GPSs, I had like 4 or 5 of them. Had my own mining rig, made it myself. And at that time, you could go onto the Ethereum websites and mine it. Whereas I'm helping do transactions on the network, on the blockchain, and for everything I helped process, I got paid for it. Because I was checking all the transactions, make sure they're good. And I accumulated like 2.5 tokens of Ethereum. So that's how I wound up getting Ethereum. And I've took some out, but I've way more than got my money back from that mining rig plus a bunch more. So that's how I wound up with Ethereum. And that's not necessarily stock related, but it's an interesting concept which relate to stocks. So I just wanted to basically come on, hadn't been on, I was trying to come on sooner than I did this time. Not really talking about individual stocks. I did, just so you don't get feared and panic buying. If you got good stocks, you got good stocks. And I was buying some stocks there. I bought 3 stocks. They were all way below my cost base, which means if you know they're below my cost base, I'm losing money on them. But you got to count the dividends I get paid for it, and that makes up for the loss, as I've said before. So I was buying those today. I think I wound up getting 3 different stocks today that were below my cost basis, which means I actually have a loss in those 3 stocks. But they're really good companies, and I'm not really too concerned about it, as long as they pay that dividend, because I'm not in for it, and I'm not in for the stock price to go up and down. I'm in for them to keep paying that dividend, the stock being stable, maybe have a $10, $15 trading range. And when it gets to the low end of that trading range, I buy those stocks. And as it gets in the mid-range and upper range, I just leave them alone. Sometimes if I think I got bought in too high, I'll sell my highest price lots. As you guys know, I've talked about doing that before, selling the highest price lots. So. But if you pull up money stuff today, the first thing up here on my screen is a picture of this big bull, and it says Dow falls 1,100 points on disappointing Fed interest rate news. So the news media is just going to keep feeding this negativism. Disappointing Fed interest rate news. It wasn't disappointing that they decreased the rates by 0.25%. What was disappointing was the Fed chairman, Jerome Powell, making that statement that he didn't see maybe no more than 3 rate cuts next year, which means the inflation is not under control yet. That is how the market took it today. Thus, you see a 1,100 point drop. And like I said, this has been 10 days in a row. So if you want to get in and buy some stocks, in my opinion, this is a really good time to get some stocks. Because when you've had the stock market, as in the Dow, to be down 10 days in a row, there's some really good buys out there. I'm telling you, some good buys. I mean, I could name a bunch of them, but that's not what this segment's about. It was just about how people panic sell, which I think is happening today. Everybody's selling, so lots of things are controlled by computers now, and they take the human element out of it. And the computer doesn't think. It doesn't think what it's doing. It just automatically does it. And sells and sells and sells. It's got matrix keyed in by a human. And when it reaches those matrices, it just keeps selling. You just keep that in mind. So I think it's a good time to get in the market right now. And, still high, sure, the market's high. We've had some nice cuts. Our stock prices go down. I think since my all-time high, I'm going to say it's like $5,000 less, maybe $7,000. I don't know, it's so much I don't really care. But that's why I don't panic. It goes up and down. You know, I had a 52-week high, all-time high, just a couple of weeks ago, and in the last couple of weeks, it's lost like $7,000. But in that time frame, I've been getting dividends, U.S. Treasury bond interest coming in, and buying stocks at what I consider a good price to get in at. So don't lose hope just because you have, in this case, 10 bad days in a row. At some point, it's going to come back up. Because nothing goes straight down, nothing goes straight up. That's just the law of the land. So let me know if you see a drone. I couldn't let that one go. And I know this has nothing to do with the stock market, but I just think it's funny that all of a sudden everybody's talking about drones. Maybe I should go get some drone companies and buy their stock. Something to look at for next time, maybe. But I hope you guys had a happy Thanksgiving, a happy Halloween, since I'm so far behind. But I'm not behind on Christmas yet, though. So Christmas is a week away from today. So you guys have a Merry Christmas. Appreciate you watching. Again, don't panic. Stay the course. If you have a good stock, stick with it. Again, thanks for watching. Have a good week.